You open your eyes at 4:53 a.m., not because of an alarm. Your body learned years ago that hesitation costs money. The room is dark except for 3 monitors mounted on the wall. Bloomberg terminals. Green and red lines pulse in silence. $9 trillion in assets under management. The capital starts moving before the world wakes. Before ministers check their phones. Before central bank governors drink their first coffee. You move it. Your coffee is cold. The mug sits on a glass desk that costs more than your first car. Floor 47. Manhattan. The city spreads below like a circuit board. Money that never sleeps. You are part of the machine that keeps it awake. On the desk, a black folder. No markings. Inside, a list of 12 names. Only 3 people in the world know what it means. You are one of them. The list will be shorter by Thursday. The market opens in 4 minutes. $6.2 billion will move in the first 22 minutes. You will move half of it. Not your money, never your money, but you decide where it goes. That is a product. Not returns, not advice, direction. The terminal blinks. You were 24 when you found the error that wasn't supposed to be there. Cell G 447, a misplaced decimal. You caught it at 4:37 a.m. after 72 hours without sleep. You saved the fund $8 million. Nobody thanked you, but 3 weeks later, you received an invitation to a meeting analysts first year never attend. If you want to see how deep this goes, subscribe. The file with the error in cell G 447 was not an accident. It was a test, and you passed. Level 1. You are 24 years old. The salary feels enormous until you see what your managing director billed for a phone call today. $18,000. 37 minutes, $500 per minute. You are building a pitch deck at 3:47 a.m. 3 other analysts sit in their pods. Nobody talks. The sound is just the hum of servers. This is the basement layer, the furnace room where the system generates heat. Your monitor shows an Excel file, 38 tabs. You are modeling an acquisition, revenue projections, cost assumptions, DCF analysis. Everything depends on whether the company can reduce headcount by 18%. The math is precise. The human cost is not modeled. You find an error at 4:37 a.m., cell G447, a misplaced decimal. If you miss it, the fund loses $8 million. If you miss it, you are gone by Monday. The machine does not forgive errors. It replaces the people who make them. The managing director arrives at 7 a.m. He does not read the deck. He reads the summary page, IRRMOIC. Entry valuation, exit scenario. He nods. Good work. He does not look at you. But then he asks one question. How did you find it? You pause. You say, I checked every formula in every tab. He nods, but his eyes narrow. You just told him something. You work differently. You don't sleep. You check what others skip. You feel your pulse in your throat. That is not diligence. That is compatibility. 3 weeks later, you receive an invitation. A meeting with pension fund trustees. Analysts first year do not attend those meetings. The email sender is not your MD. It's a domain you've never seen. No signature. Just a time and a floor number. Level 2. The elevator requires a key card now. Floor 32. Your badge says Associate. You are sitting across from pension fund trustees. $430 million in assets. They are the trustees of the Colorado Teachers Retirement Fund. 4 million teachers depend on their decision. They are looking at you. They are waiting for certainty. Your mouth is dry. You have rehearsed this moment 243 times, but you did not rehearse how to make doubt invisible. The trustee on the left is Margaret Chen, 63 years old, 38 years as a teacher. She asks, what is the downside scenario? You pull up slide 17, base case, bear case, worst case. The worst case shows 3.2% annual return, below inflation, below their assumed rate. What you do not show is slide 18, the one you deleted last night at 2:37 a.m. Catastrophic scenario, negative 2.7%, probability 0.8%. Your MD told you if you show that slide, they don't sign. Your cursor hovered. Delete, you paused. 2 seconds. Then you clicked. Margaret Chen asks about a liquid asset concentration. You say, we believe 28% concentration allows you to capture liquidity premium while maintaining adequate flexibility. What you are actually saying? If the market crashes, you will lose money you cannot get back. What they hear. This is a smart decision. She signs $430 million. Your carry, $220,000. She shakes your hand. Thank you for your confidence. You nod. You leave. You check your phone. News alert. Major pension fund declares restructuring through bankruptcy. Cause, underestimated tail risk in illiquid assets. Their concentration, 29%. The fund that just signed, 28%. You open your email. Subject, promotion coming. Your hand is steady, you feel nothing. That's the shift. Level 3. Your office has a door now. Floor 41. No nameplate, just a number. 3 weeks later, you are in an office on floor 32. The managing partner sits behind a desk made of black walnut. On his monitor, a spreadsheet. A list of 800 names. Employees of Meridian Logistics, the company you just acquired. He says one word, optimization. Headcount reduction, 812 positions. Severance cost, 19 million upfront. EBITDA, improvement, 41 million annually. Net benefit, 93 million. The math is perfect. The human cost is not included. We need board approval by Friday. You will present this. You build the presentation. 18 slides. You use words designed to make 800 people disappear on paper. Right sizing, strategic realignment. The language functions as insulation. The board approves. You receive a promotion. Salary increases by 180,000. 3 days later, an email. Anonymous sender. Subject, do you remember row 447? Attached, a screenshot of your spreadsheet, the version before final edits. Original count, 813. Final count, 812. One name removed, David Ramirez. Age 42. 19 years at Meridian. In the original version, his role was marked critical operational role. In the final, that note is gone. You did not make that change. Metadata shows, last edit 2:37 a.m. Editor, senior partner you have never met. Comment, adjusted per board guidance. You Google him. LinkedIn, last update 3 years ago. One endorsement from a managing director at a competing pension fund. The fund that lost the Meridian tender 2 months before your deal. David Ramirez is not just an employee. He is a witness, and someone decided he needed to go. Level 4. You control trading systems that move 2.1 billion daily. You design the rules. The machines execute. Human emotion removed. The algorithm runs on a server farm in Virginia. 409 lines of code. One rule, sell when volatility spikes. In normal conditions, safety. In a crash, a bomb. Line 237. If volatility exceeds threshold, execute sell at market price, no limit. You modeled it. You presented risk to the CRO, Thomas Kellerman. You told him crash probability, 0.03%. He approved. 3 months later, the algorithm executes 218 sell orders in 4 minutes. The market drops 1.7%, recovers in 11 minutes. Your fund loses 41 million. SEC opens inquiry. You provide code. Everything legal. Inquiry closes. 1 week later, a flash drive by courier. No return address. Inside, real risk assessment V, final, do not distribute. Your assessment, but the version you did not send. Flash crash probability. Not 0.03, 3.2, 100 times higher. Additional section you did not write, systemic contagion modeling. Conclusion, if 3 funds deploy simultaneously, crash probability 19.4%, signed with your name. Metadata shows, created 2 days before you sent final version. Author, system administrator, last modified by Garrett Whitmore, chairman of a family office managing 83 billion. Second file, deployment list. 11 funds, identical algorithm, deployed within 6 weeks, combined AUM 4,700 billion. Fund 1, yours, deployment earliest, loss highest. The others deployed after. They knew, you didn't. The crash was not error. It was a test. You were the guinea pig. Level 5. Your phone has 2 numbers, one listed, one not. The unlisted rings at 6:18 a.m. encrypted line. No caller ID. The voice, Deputy Minister of Finance, European G7 nation. He does not introduce himself. He asks, if we announce the green bond program before the central bank meeting, what happens? You answer, spreads compress. Market interprets it as policy coordination. If you announce after, momentum dilutes. He says, thank you. Call ends. 211 seconds. 3 days later, announcement. 41 billion euros in green bonds. 2 days before ECB meeting, spreads compress 11 basis points. Your fund holds 2.4 billion. Position generates 47 million. But you check trade logs. Position opened on the 8th. Minister's call, 16th. Announcement, 19th. You did not authorize opening on the 8th. Approval chain, executive committee override. No individual attribution. Decision made where names not recorded. You dig through archived emails. One sent 2:23 a.m. On the 7th, subject. Positioning ahead of G7 coordination. Sender. Strategic Advisory Board. CC, your email. You never received it. Deleted before you saw it. You retrieve it. Body. Ministerial consultations indicate preference for pre-ECB timing. Recommend positioning EUR 2.4 billion. Call scheduled 16th, 1818. Talking points attached. Attachment, ministerial call script V3 final. You open it. Script of your conversation, word for word. Written 9 days before the call. You were not giving advice, you were reading lines. Your bonus that quarter, 1.2 million. Based on green bond position, a position you didn't open. You were paid for reading a script. Level 6. You design structures, legal, tax. The client, family office managing 72 billion. Chairman, Garrett Whitmore, mid-50s, silver at temples. He asks, what is the risk? You explain, regulatory change, reputational risk manageable. We structure everything to withstand audit. He asks, probability? You answer, treaty changes slow. He approves. 3 years later, family office saves 2.9 billion in taxes. You are paid 4 million. 2 months later, news, Whitmore's home state cuts public school funding by 93 million. You check tax records. Before your structure, Whitmore paid 308 million annually. After 12,400,000. You open Whitmore Foundation filings, board members, 6 names. Third name, Thomas Kellerman, CRO, who approved your algorithm. He's been on Whitmore's board 9 years. 3 years before you met him. You check your personnel file. Interviewer, Thomas Kellerman. Date, 3 years before Cell G 447. Recommendation, strong analytical skills. Low risk of ethical objection, low risk of ethical objection. Not a compliment, a diagnosis. You are not hired for being smart. You are hired for being morally predictable. You draft email to compliance. Subject, conflict of interest. 3 paragraphs. Finger hovers over send, phone buzzes. Text, unknown number. No words, just a photo. Your daughter, outside her high school. Timestamp, 11 minutes ago. You delete email, delete draft, delete trash, close laptop, phone buzzes again. Text, thank you for your discretion. You understand, you were not just tested 21 years ago, you are still being tested. Level 7. You sit in rooms with no nameplates, no agendas, no minutes, glass and silence, London, Zurich, Abu Dhabi, sovereign wealth managers, central bank advisors, family offices, you. Conversations abstract, language vague by design. If everything interpretation, nothing coordination. But everyone knows what words mean. You contribute 1 sentence per meeting, not more. Too much talking signals insecurity, silent signals control. Duration risk mispriced in long-dated sovereign debt. Real rates rising faster than consensus. Risk in convexity, not credit. 3 weeks later, 30-year yield spike 41 basis points. Your fund reduced duration 8 weeks earlier. You position for possibility. Trading responds to market. Positioning precedes it. You check who else reduced duration. 14 funds made identical moves. Combined volume, 319 billion. You cross-reference names. 11 of 14 at Singapore conference 3 months ago. Conference agenda, closed door roundtables. Session, sovereign duration, risk coordinated positioning. Time, 1800 to 1822, 22 minutes. Moderator, not listed. Footnote, Chatham House rule, no attribution. Your calendar shows personal time. Your keycard log shows floor 68, 1802 to 1824. You were in that room. You don't remember agreeing. You try to remember. Glass, silence, water. Nothing else. Not because you forgot, because you were not supposed to remember. Zurich was not first. It was final briefing. You were executing plan written months earlier. Level 8. You do not have title. Business card, only your name. People who need to know already know. Senate subcommittee, closed session. Question, what happens if you fail? You answer, cascade. No legislation follows. 2 days later, email, personal address. Sender, one of senators. Subject, off the record. Text, as discussed privately. You never discussed anything privately. Email headers, BCC, Strategic Advisory Board, Garrett Whitmore, coordinationframework.org. Registration date, 2 days before first meeting, floor 68. Security logs, keycard history, 21 years, 16 cards, all tied to your name, but one card used 47 times not tied to badge. Card number, XX override 447, cell G 447. The error you found 21 years ago. You were not selected after, you were selected before. File with error was test. You passed. Not because smart, because willing to work 72 hours without asking why. Security database. Search. exec override 447. Access history. 4,291 entries. 47 buildings. 19 countries. 63 names. You recognize 11. All found error. All passed test. All thought chosen for being smart. None knew chosen for being compliant. You feel nothing. Because that's what test measured. Not intelligence. Capacity for emotional elimination. Somewhere in glass tower, 24-year-old opens terminal first time. Badge new. Faint chemical smell. Title. Analyst, Investment Strategy Division. He thinks 142,000 is wealth. He does not know wealth is not money. Wealth is distance from consequence. Manager sends file. Excel model. 38 tabs. Instructions. Check for errors. Need clean by tomorrow. He opens file. Cell G 447. Error there. Waiting. 48 hours to find it. He doesn't know. He thinks he's working. He's being measured. 40 floors above, you close eyes 11 minutes before next call. You open email. Unread from coordinationframework.org. Subject. Transition timeline. Text. Your phase 8 role concludes 18 months. Candidate pool. 47 individuals. First screening attached. Attachment, Excel. Candidate 2847. Cell G 447. Discovery. 71 hours, 14 minutes. Assessment, acceptable. Ethical objection probability, low. Proceed to phase 2. Timestamp. Today, 2:37 a.m. Time when edits made no one supposed to see. You close email. Cannot delete. Never sent to you. Sent about you. Copy till you know. Machine does not stop. Just changes parts. You were always part. From day you opened file with error in cell G 447. Error inserted to find people like you. People who work 72 hours without asking why. People who delete compliance email when shown photo of daughter. People who approve trade when they know it's not their decision. Because it was never about money. About building system that runs itself. You are not system. You are oil, keeping it running. You look at position. 3.8 billion. Announcement in 4 hours. You know what happens. You know who decided. You know it's not you. You approve trade anyway. Because that's what you were trained to do. Terminal blinks. Market opens. Machine takes another step forward.